Aloha everyone, welcome back to my channel where we dive deep into Oahu's real estate market. Today, I want to talk about a significant shift that's impacting the condo market here in Honolulu, skyrocketing insurance rates. It's a trend that's reshaping the market landscape, affecting both buyers and sellers. If you're considering buying or selling a condo on Oahu, this information is crucial for you to hear. Let's jump right into it. In June of this year, was down nearly 25% compared to last year. And this decline happened even though we had more units for sale than at any point in the last 3 years. Why is this happening? Insurance rates. The rising frequency of catastrophic events has led to more claims, which drives up the cost of insurance. When an insurance company pays out large amounts for claims, they need to recoup these costs, which leads to higher premiums for everyone. But let's break down exactly how skyrocketing insurance premiums are putting pressure on the market. Hurricanes, wildfires, and other disasters have pushed up insurance rates across the US. Here in Hawaii, many condo associations have seen increases in their insurance premiums of 300% or even more. Some have faced unimaginable hikes of 900 to 1300%. And these aren't just numbers on a spreadsheet. These increases directly affect what owners have to pay each month for HOA fees. It's estimated that about 400 condo associations on Oahu are now carrying less than 100% replacement coverage on their master insurance policies. That means if something catastrophic happens, like a hurricane, there won't be enough money to rebuild. For condo owners, this is a big risk. And for prospective buyers, it's a major red flag. And here's another issue. Most local banks aren't willing to lend on condos in buildings that are underinsured. This means if you're a buyer who needs a mortgage, purchasing a condo in an underinsured building can be almost impossible. Even some deals that were in escrow have fallen through because buyers couldn't secure financing. This insurance crisis is going to keep shaping the market over the next 6 months. We're already seeing some of the impact. Sales in key neighborhoods like Waikiki and Makiki, Moiliili have dropped drastically, 48% and 38%. The hardest hit segment would be condos under 700,000. In June, sales of units priced between 500 and 700,000 were down by almost 40%. Even more affordable condos priced between 300 and 500,000 saw sales drop by up to 32%. This tells us that affordability is being seriously impacted, especially for buyers who are already feeling the pinch from rising interest rates. On top of that, condos are taking longer to sell. Active inventory in June was up by 49% compared to last year. That's the highest we've seen since 2020, and the average time it takes for a condo to sell has increased to 29 days, compared to just 22 days in the first half of last year. Now, some local credit unions are still providing loans for condos that don't have 100% replacement coverage, but these are exceptions. Big banks are simply not taking the risk. As Alan Fentress from American Savings Bank puts it, they won't extend loans on underinsured buildings. It's too risky for buyers. Deferred maintenance is making things worse. Older buildings that have been putting off critical maintenance projects like replacing aging pipes are seeing even higher insurance premiums. And here in Hawaii, our salty air environment means wear and tear happens faster than most places. It's a reminder that proactive upkeep is crucial if buildings want to avoid massive hikes in insurance costs. So, where do we go from here? Interestingly, we're seeing some buyers shift their attention to newer condos, buildings that are fully insured and have better maintenance records. In areas like Kaka'ako, projects like Ililani are seeing increased interest because they offer peace of mind when it comes to insurance coverage. If you're a seller, here's my advice. Order those condo docs upfront before you list. Look at the insurance summaries closely. You want to be prepared for potential issues that could impact your buyer's ability to secure a mortgage. It's also about being proactive so that you're not blindsided halfway through a deal. Lastly, this isn't just a local issue. Similar situations are unfolding in places like Florida and California. The situation has gotten worse since Hurricane Helene and Milton hit the southeast recently. There's a growing need for government intervention, some kind of legislative fix to address the rising insurance premiums that are crushing affordability. Bills were introduced earlier this year, but unfortunately they failed to move forward. There's no simple solution to this problem. For now, navigating Oahu's condo market requires understanding the insurance landscape, being prepared for financing challenges, and staying ahead of maintenance concerns. If you're a buyer, a seller, or just someone keeping an eye on the market, I'd love to hear your thoughts. How do you see this playing out for Honolulu? Thanks for tuning in today. If you found this information helpful, please give it a thumbs up, subscribe to stay updated on all things Oahu real estate, and hit that notification bell so you don't miss our weekly updates. Till next time, take care and stay informed.